order the meeting of the Livingston Parish Council Finance Committee meeting for Thursday, July 27, 2017.
Don't have anybody call the roll.
Well, we don't have anybody to call roll or run the stuff. Hold on one second.
Yeah, well, I didn't even know y'all were here.
Well, you should have known I was loud.
We've already called the meeting to order. Would you call the roll, please?
Yes, sir. Jeff Lord.
Here.
Tracy Graham.
Here.
Here.
Gary Johnson.
Here. Any old business? I don't think we have any. Jennifer gave y'all got all the numbers in front of y'all. If you have any questions, we might address her, but hopefully we can just hear the audit and go from there. You want to go ahead and make the presentation on the audit for us?
Yes. So my name is John Murray. I'm a CPA with LaPorte CPAs, and I have y'all's the audit report there. We'll kind of go through a few highlights of it. And this is the audit for the year ended December 31st, 2016. And the first thing to go over is our opinion on y'all's financial statements, which those begin on page 1, and actually the opinions are on page 2. So there's 2 opinions that we have. One is on the parish as a whole, which is an adverse opinion, because y'all don't include like the fire districts and the rec districts and all those entities in y'all's financial statements. Then the financial statements of the parish council are in the next section, and our opinion on those was unmodified. In other words, the financial statements referred to above presenting fairly in all material respects the financial position of the government activities, the business type activities, and all the major funds of the parish council for as of December 31st, 2016, and for the year ended. The next section is the management's discussion and analysis, which is more kind of a narrative of the financial statements. I'm going to skip that, but that's some good reading. And the financial statements begin on page 13. The financial statements for government, there's 2 different sets of financial statements. One is entity-wide, which includes all y'all's fixed assets, all y'all's debt, and it's pretty much full accrual. And the other one is the fund basis, which is what y'all budget based off of, which doesn't include fixed assets or debt, modified accrual. So if you look on page 13, there's 2 sections, 2 columns: governmental activities, everything except the utility fund, and the business type activities is the utility fund. So for the governmental activities, y'all had total assets of $174,697,000. Of course, the biggest part of that is in your capital assets, net of depreciation. You had cash of $11,250, and then a big number there is due from other governments, which is larger this year because it all includes all the FEMA reimbursements that were receivable as of December 31st for the flood recovery. The next section is some deferred outflows related to the pension obligation and some past refundings of debt. Then the liabilities, the total liabilities was $87,685,000. And of that, accounts payable is $14,356,000. And again, that's a higher number than it normally is because it includes those, debris removal, payables as of December 31st. Then your non-current liabilities, which is all your debt, those total about $71 million. If you subtract that out, then that gives you a total net position. So for governmental activities, that was $92,856,000 at the end of the year. Of that, unrestricted was $27.6 million. You had about $8.1 million in restricted, and the rest of it is all pretty much in fixed assets. Your utility fund, you had assets of $7,453,000, liabilities of $3,327,000, and then net position of $5,126,000, which is almost all fixed assets. The next section is the statement of activities. And it begins with expenses, and so it shows all y'all's different functions for the governmental activities. And so y'all's total expenses were $58 million. You had charges for services of about $2.6 million. And this is a large number again because of the FEMA reimbursements of operating grants of $25 million, and then capital grants of $1.7 million. That gave you a net expense of about $28,540,000. And that's kind of a weird schedule, but it kind of goes down. And then you have your general revenues, which is all your taxes, occupational license, and those type of revenues. And that was about 29 million or for the year. And so that gave you a positive change in net position of 655,000 for the year for the governmental activities. For the utilities, and y'all can, if you have any questions.
The interfund transfer, is that on utilities?
Yes, that 450,000 is transferred from the general fund to the utility.
And the utility fund is the sewer districts that we operate as the parish?
Yes.
Right.
Yes, sir.
So we're losing $450,000 a year on those deals?
And we'll see the schedule kind of details that a little bit further
Okay.
as we go on. The next schedules, set of financial statements are y'all's fund basis, which is kind of what y'all normally looking at. And those are for the major funds, those begin on page 16. So your general fund had total assets of $12,441,000, had liabilities of $2.1 million, and a fund balance at the end of the year of $10,270,000. Of that, $6.7 million is assigned, and then there's a big non-spendable amount, which is advances to the jail sales tax fund, and we'll kind of go over that next. The health unit fund had total assets of $6,552,000, liabilities of $296,000, and the fund balance, which is almost all assigned for the health unit, of $6,255,000. The jail sales tax had assets of $1,430,000, had liabilities of $9.4 million, which almost all of those liabilities are either due to other funds or are deficit in pooled cash. And so that resulted in a net deficit in fund balance of $7,970,000. And we'll kind of go through the income statement on that next. The road fund had total assets of $12,039,000, liabilities of $2,460,000, and a fund balance of $9,579,000. Of course, most of that's assigned for the road or restricted for road. On the next page, because of the FEMA, the Office of Emergency Preparedness Fund was a major fund this year. And so we had $11,790,000 in assets, and that's almost all due from other governments, from FEMA. And we had liabilities of $11,554,000, so our fund balance was $238,000. The total of all the other funds, which are mainly basically your debt service funds and non-major special revenue funds, those had a fund balance of $9,971,000. The next schedule is a reconciliation between those two. And then the income statement for the fund basis is on page 19. Now on the general fund, y'all had a loss for the year of $954,000. But the way the funds record in revenue, it's based on 60 days after that's at the end of the fiscal year. And with the flood and the property taxes were delayed, so y'all had a lot of property taxes that weren't collected in that 60-day period that's going to be collected later in 2017. So that's one reason that showed a pretty good loss this year. In addition, y'all had to transfer about $2.2 million to the OEP fund for the local match for the FEMA grants. So that was the so y'all had a loss for the general fund of $954,000. The health unit had a loss of $601,000. And then the jail sales tax, which, that was one that has a deficit. This year, it only had a loss of about $18,000, and that was compared to last year, it was about $589,000. So that has improved. But of course, that fund, it's paying debt service about $1.8 million, and that debt will roll off in 2021. So I guess at that point, they'll really make some progress in getting rid of that deficit.
So on the jail, we only lost $18,000 for the year?
That's correct.
That is attributable to two factors: the increase in the sales tax that we collected because of the flood, and because some of the out-of-parish prisoner housing monthly costs are included in the numbers in OEP because FEMA is going to reimburse them. So you're not seeing some of the expenses for the
So all those prisoners that we shipped out post-August are going to be covered by FEMA?
post-flood until the time period that the jail was inhabitable again, which is about a 2 to 3 month period. I want to say, if I remember correctly, so about 3 months of those costs for out-of-parish prisoner housing will get reimbursed at a 90% rate by FEMA. And then the sales tax was increased because of the flood. So you're not seeing a true reflection of what we would have lost with the jail on a normal year of operation, which is about the.
So we're not so we're not deferring any of that stuff from last year's not showing up this year. I mean, we're all within the. I mean, like the jail was inhabitable when? In November sometime, Leighton?
August.
August through what? October, November.
So what I'm wondering, do we have any lingering bills that didn't get, or is everything accounted for in the month of December?
Everything is recorded.
Okay.
Right. There may be some bills that were still owed, but then y'all have FEMA reimbursements that y'all due as well.
Okay.
The road fund had a profit this year of $459,000, and that's kind of comparable to last year's, about $496,000 for the road fund. And then that fund balance again is $6,579,000.
Okay, what part of that fund got transferred to DPW? I mean, we know that fund, some of it's for roads, and some of it's for match, and some of it's for Operation DPW. Is that broken out in here?
I think so, and also some of it's transferred out to pay for bonds as well.
Right. Like the 5.2 million that's transferred from component units. Is that's we're sending that to where?
That's actually transferred out to other funds.
Yeah, that's what I'm saying. So
yeah, I think those are all going pretty much to debt service. There was $550,000 that went to the admin fund, but I think the rest of it went to the debt service.
So that's so of the whole fund, only $550 went to DPW for operation. Okay.
That's all recorded in the same fund. DPW is that.
Okay. So DPW's operations are paid out of road fund?
Yes.
Okay. All DPW operations?
Yes.
Okay.
And then the OEP fund, you can see that was a pretty large number. You had total reimbursements of $15,245,000 and expenses of $17,287,000. And then you can see that transfer in of the local match of about $2.2 million. So net, you had $85,000 net for the OEP fund. For all the other governmental funds combined, those had a loss for the year of $697,000. And I think probably most of that's due to just the regular debt service of those debt service funds. The next schedule is another reconciling schedule, and then the next schedules are the budget schedules. And we're going to kind of go over a note that kind of talks about the budgets that have unfavorable variances for the year. So we'll talk about that when we get to those. The next section is on the utility fund. And let's go to the income statement, which is on page 28. And that'll kind of show that loss in the utility fund a little bit more clearly. So for the utility fund, y'all had operating revenues of $162,000. That was all just pretty much your charges for services, miscellaneous charges. Then you had your operating expenses, which totaled $537,000. Of course, $288,000 of that is depreciation on fixed assets. Then the rest is just your personnel services, repairs, and all your other expenses related to that. That left you an operating loss of $374,000. And you had interest you had to pay on the debt of $93,000, which gave you a loss of $466,000. You had the $450,000 transfer in from the general fund, and so you had a total net loss of about $17,000. I want to talk about some of the notes to the financial statements next. If you go to page 53, 53 is the capital assets note. And we started the year with capital assets of $135,489,000, and that's net of depreciation. We had increases of about $4,291,000, and then depreciation about $12,221,000. So our end of the year was a little bit lower, 126,805. And we still have about 3.5 million in construction in progress, and that's related to the Cook Road and to the communication tower projects. For the utility fund, their fixed assets, there were no additions, it was all depreciation, and so that decreased by that number. The next page is the long-term debt. This note kind of recaps all y'all's debt. And y'all had total debt at the beginning of the year of $79,041,000. And then you had increases and then retirements, which made it $71,537,000 at the end of the year. Now, one thing, y'all have to record y'all's portion of the PERS retirement on y'all's books, and that was an increase in the pension liability of about $1 million. And that was really because PERS lowered their expected investment rate of investments, return on investments. And but PERS is still really well funded. It's like 93% funded, which is like one of the highest funded in the state plans. Y'all also continued to have refundings, which basically takes advantage of lower interest rates and saves money. And y'all had one for the Office of Motor Vehicle loan or bond, which saved was about $4.3 million, and that saved about $208,587. If you go to note 27, that's on page 80. Kind of talked about the revenues and expenditures, actual compared to budget. And these were funds that for the general fund and the health unit fund, basically we budgeted revenues of a certain amount, but the actual revenues fell short. And that all really relates back to our property taxes being delayed.
80.
It's on page 80. But those were over 5%, so that is a finding of the budget law, and we'll go over that finding later. The OEP fund, also, we had, final budget, but then our actual was a little bit less than that, and that's kind of just, with the flood and everything, it's kind of a lot, in play there. As part of the audit, we did some testing of internal control and testing of compliance. And our report on that is on page 95. As for the internal control part, if you go to the next page, 96 at the top, our testing, we did identify certain deficiencies described in the accompanying schedule of findings that we consider to be significant deficiencies. Internal control-wise, you can have really bad problems or material weaknesses. Then you have significant deficiencies as kind of the lower end, and then finally control deficiencies is like not really that big of a deal. So these two were both significant deficiencies. And then likewise on compliance, we did testing on compliance, and we had a finding regarding compliance, which is 2016-003. And we'll kind of go over those later. As part of the audit, we do an audit of y'all's compliance with federal programs, with the requirements of federal programs. And that is on page 97. And basically on our testing, we gave y'all a clean opinion, unmodified opinion on y'all's compliance. And we didn't see really any findings related to that, to the federal programs. And we didn't see any control issues as well. There's a schedule of all y'all's federal programs, which might be interesting to look at, which is on page 99 and 100. Y'all's total federal programs was $21,047,000. Of course, the biggest part of that's going to be like your FEMA money, which totaled up to about $15 million. That's, yeah, $16 million. We'll go over those three findings next, and those begin on page 103. The first one is one we reported to you before. It's related to the permit software. We do a test of that, and we noted there's some gaps in the sequence numbers. And really our recommendation on that is that y'all look at Baby Bide software that would improve the accounting for that permit revenue.
So we're still getting gaps in the permits?
Yeah, we haven't
It's the
bought the software
software.
yet. Till we get the software. we have
It's
that.
probably gonna take an increase in permit fees before the permit.
How much
software.
is the permit software?
I think it's like 45,000,
How many permits do we issue a year?
about $1.3 million.
I mean, how many numbers? I mean, like,
The problem with this software is that it doesn't segregate actions, so somebody could be online buying one and in the office buying one. If the person online cancels theirs, it just doesn't fill out that number. So that it reserved the number, but then it deleted it, so that number's missing.
But it may say 9,000, it might only be 7,000.
so we're talking about $45,000 worth of capital expenditures would eliminate?
Well, no, $45,000 is to get the software, and then you have to pay the software fee every year, whatever, whatever it is.
You know how much that is?
I want to say it's like $10,000 a year.
And we'd eliminate a finding, and we wouldn't have any missing sequential numbers on permit.
But I chose not to buy it until this next.
Okay.
The next finding relates to the budget amendment, and so as, the budget law requires that when y'all have variances of revenues or expenditures, revenues under 5% and expenditures over 5%, that you amend that budget. And we kind of talked about that before, so I won't go over that again. In addition, you really are not supposed to budget a deficit, and of course, the jail sales tax fund has a deficit, which I went over as well. The third finding, one of the things we always test is credit cards, and during the year, we tested 46 credit card transactions, and we noted 2 that were supported by like the credit card receipt. So like, when you pay, you get like the little receipt, but it didn't say, like, show you like everything that you bought. And so we just really recommend that y'all, get that credit card receipt, but you get the, the itemized receipt as well. And then there was one transaction for which supporting documentation could not be located. And I will say, a lot of these, transactions were all, pretty much in the flood recovery, time period, go into that. So. But, we kind of recommend that y'all, review those credit card statements each month, make sure that you have everything, make sure everything's properly supported, and that you, basically, management says they will more closely review those. We did have some findings from the previous year, one that rolled off. We had a finding related to period of availability of funds related to the hazard mitigation grant, and that finding has been resolved. That didn't reoccur this year.
Now, we amended the way we counted overtime. Was it overtime with respect to emergency response? We changed the policy this year with respect to the way we calculated overtime for salaried employees when there was a disaster, right?
Yes.
About 2 months.
Yes, that was
Because of
December 16th. December 2016.
I thought we changed it because of the audit. Okay.
Now, I will say one thing, based on our FEMA testing that we do, a lot of y'all's forced labor and your use of machinery, those PWs weren't approved until, even this year. So a lot of those transactions will be tested next year.
From during the flood, during the emergency response and things to.
Right.
Okay.
So it's just kind of, I guess, kind of a little bit of a
And
time.
it drags out, yeah, sure.
Yeah.
Okay.
Do you have any other questions?
The deficit in the jail fund, it doesn't affect our cash position, does it? If you say we've got $10 million in the bank, then we've got $10 million in the bank. We're not having to hold $7 million back to offset the jail fund deficit. That money's already been spent and it reflects in our cash position, doesn't it?
Well, let me just show you one thing, though. If you look on that jail sales tax fund, one of the liabilities is a deficit in pool cash. So y'all pull all y'all's cash, and so that that fund did have a deficit in the pool cash of 2.7 million. Of course, it doesn't affect y'all's cash being overdrawn or anything because y'all have all y'all's cash, is pooled for all.
Okay, let's go. Where's the, which page was it that you showed us what our cash position was at the beginning of the year? At the end of the year, we talked about assets and you talked about cash. What page was that?
That was on page 16.
So I guess what I'm saying is when you go to page 16 and the general fund's got 709,000. And so total governmental funds cash are 2.1 and then pool cash is 12.1. The $7 million loss is reflected in that already, isn't it?
Yeah, I mean, basically it does represent, monies that have been spent. And a lot of those are shown in this advance from other funds, which one thing governmental accounting requires, like if you have like U2G funds that, are going to be settled, then those stay on there. But if it's going to be something that's going to be a little bit long-term, then it's kind of separated into an advances column, just to show that it's not spendable.
Well, with the jail fund, for example, so it shows a deficit of 7.9 million that we've accumulated, right?
Yes, sir.
And you say that the debt for the sales tax will be gone in 2021.
That's
The
correct.
sales tax revenue will be gone in 2021 also, unless it's voted on and go by the people. So in theory, there's no guarantee that you'll collect any more money after you retire the debt. So how do you continue to hold the $8 million on the books as a due to from?
Well, I think it's because, you owe it to yourself, basically. You owe it to other funds.
So do we owe it to other funds or do we owe it to general fund revenue?
You owe it to, general fund primarily, but also, I think your health unit fund has a small amount. So, but yeah, and then like the pool cash fund pretty much includes everything.
I got you. Now, the health unit fund, when the tax was renewed, there was a surplus.
There's a
And
pretty
so
large surplus.
and the last council chose to lower the millage, so theoretically, I guess the surplus would go away. Are we on target for the surplus to go away at the time the tax runs out, or are we going to end up where the parish is kicking in money before the tax comes up for renewal? I mean, based on the surplus you've got calculated and the deficit they're running every year, how do we look on that deal?
Okay, so the surplus we have is $6,255,000 at the end of the year. Y'all's loss for the year was $601,000.
So we got a 10-year surplus.
Yes, now I
And
would
that tax was renewed, what, 3 years ago? 4 years ago?
It was 2.
2 years ago.
and I will say, remember
before we
the
ran.
deal with the property taxes being delayed, that has some effect on that.
That has
So-
some effect as to why the surplus is low?
Right, so probably, that surplus is not going to be as much next year.
But that's a sales tax rate. No,
That's exactly right.
it's a,
But the normal calculated loss for that fund on a non-flood affected year is about $250,000.
okay.
They predicted the last 15 years, I think.
Okay.
I remember crunching the numbers myself. I think we were like $200,000, maybe just under a year. We wouldn't have had the 5 mil in place, and we went from 5 mils to 2 mil, right?
So my question is, if you've got a health fund and you have and you continue to decrease the surplus every year for the operation, if you have a disaster that has a need for this, we could deplete the fund overnight.
Absolutely.
Yep.
That was
That was our argument.
our argument every time this council talked about lower millage. It's gonna hurt this parish at some point down the road. Hopefully it never happens, but it could.
Okay.
Absolutely could. But they went on and passed it.
Y'all got any questions about the budget? So you're gonna hang around and make the brief presentation to the council?
So what do you want me to tell?
I don't know. I mean, the home rule charter says that the budget's submitted to the whole council.
That's all.
Now, we could make a motion and favorably accept the budget, and then, you know, maybe we could make that as part of the, there's an item on the agenda for him to make a presentation?
Yes, but I think what you're saying is true. I don't think it's an item on the agenda for him to make a presentation.
Typically, they don't.
Just an item for
I don't
saying
see
whether we accept it or not.
So we could accept it at the committee level, and then we could make a recommendation to the whole council, and they could accept it without presentation, and we'd be good?
That's the
Is that right, Sandy?
We've actually satisfied your requirement for the home rule charter just by obtaining an audit manual. There's nothing in there except the council has to.
We just have to accept the audit. We've
You've
got,
done what you needed to do just by securing
Okay.
audit services.
can we get a motion to accept the presentation of the audit? Favor? Any objection? None, so ordered. Thank you, sir.
Okay, can we stick around, or?
I don't
I think the
think,
most important thing is just to go over that we got a clean audit opinion and the 3 findings, and that it was a good audit.
okay.
All right, well, thank y'all.
Appreciate it.
Let me know if y'all have any additional questions.
Yes,
Please feel
sir.
free to call me.
Okay.
Hey, we're gonna skip B. We're gonna skip B tonight. Y'all got them. If you've got any questions, we go over it. Hey, under other, I got Lauren to make some inquiries about, and you've all got in your packet, different quotes on traffic calming signs with relation to speed notification. So we're not going to go through it in detail, but what I would like for y'all all have it in front of you. If you would take some time to go over it, look at it before, you know, the next meeting. Do some homework yourself on what the options are, and just so we can educate ourselves on what's out there to try to maybe assist, and then we can evaluate whether we want to look at doing a pilot program somewhere, you know, with some help from a neighborhood if they want to try it. But there's some information to the costs and what those costs are, so
Okay.
everybody can bring themselves up to speed as to what's available through electronic notification to, you know, in traffic calming.
All right.
Anything else? Can I have a motion for adjournment? Motion by Mr. Girlinghouse, second by Mr. King. No objection. Meeting adjourned. Thank you.